We've been talking about how there's no way in hell the Fed can cut interest rates. That's ridiculous. And if we look at things like the stock indexes, well, does that not look like maybe a market top? It kind of looks like a market top to me. Is that the big bull market sort of over the past 3 or 4 months? I think so. So that seems to align with this kind of, bull market top, early sort of mid, full recovery. You see the inflationary data, you see jobs market is super strong. The Fed should be raising interest rates right now, not cutting interest rates. Murat's presentation on Friday about his relative rotation study basically is giving us the same information as this first 2 weeks. The first 2 weeks just simply is going to say, what are all the ETFs that represent the different sectors of the economy? And really, where's the money flowing into, given the fact that this is the beginning of a new quarter? And frankly speaking, I think the answer is really, really straightforward. If anything, I almost think, you probably don't want to overthink this. What I would simply say is, where does it look like the smart money is figuring the economy is, i.e., where is the heaviest money pouring into, and where are people placing their bets? And clearly it's in the energy market. And then I would flip it over and just say, where is the money heading out of? And it seems to, interestingly enough, be heading out of healthcare. So just based on that premise, what that just simply says is, here is energy. So are they thinking we're somewhere in this area? I think so. And here is healthcare. Are they thinking that we are definitely not in this part of the cycle? I think so. So that's sort of like early to like sort of full recovery, somewhere in that window. Bull market heading into a market top. Everything that we've talked about lately, I think makes perfect sense. We've been talking about how there's no way in hell the Fed can cut interest rates. That's ridiculous. And if we look at things like the stock indexes, well, does that not look like maybe a market top? It kind of looks like a market top to me. Is that the big bull market sort of over the past 3 or 4 months? I think so. So that seems to align with this kind of, bull market top, early sort of mid, full recovery. You see the inflationary data, you see jobs market is super strong. The Fed should be raising interest rates right now, not cutting interest rates. That's the irony of all of this. And frankly speaking, looking at that retail sales number today, I think the Fed's falling behind the curve. And I think that, once again, why does anybody in the public listen to the Federal Reserve or listen to any of the talking heads? I mean, the guy who's in charge of the Federal Reserve right now is by definition a lawyer. Point of the matter here, I would just say, is I think that the message from the market is actually pretty simple. I suppose we could drill back just to see if there's any confirmation. Let's just do the first week. I never get these things right. Should I actually start the study from March 28th? That's the end. So that includes the first, or does that include the first? I can never remember how this goes. But let's just do the first week with the April 1st. So that is there. Same data. In fact, this is even more of a sales pitch for this part of this cycle. And I actually kind of like that, because I did see some of the industrial names are actually looking really juicy. So, and then also too, you heard me talking about Newmont and all that kind of stuff. A lot of the commodities look really juicy here right now as well. So both ways that I see it, I see that we're basically in this part of the economic cycle. Suppose we can look at the data and see if this makes sense. So, early recovery, full recovery. So that's sort of suggesting we're somewhere in here. So consumer expectations rising, declining. Inflation expectations, sadly, is rising now. I think this is more like consumer confidence. Interesting how we did have a down print in the consumer confidence, I think on Friday, right? We had the University of Michigan consumer sentiment. I'd actually say, and I even posted that chart in the lounge, because I think there's a little bit of tomfoolery going on in this market right now, where when I looked at that consumer confidence chart, the actual data itself, it didn't really look that bad. There was a down print, but it wasn't like there weren't any M's or anything working. So I still think that we're kind of like in that rising, but now we're actually starting to get a couple sort of down prints. Maybe we are going to start making some M's in the not too distant future, but somewhere in here, I think makes sense. Industrial production rising versus flat. And I think we've been seeing this kind of data. And this is one of the reasons recently I've been talking about how the Fed can't raise interest rates, because a lot of the econs coming out actually showing that things are just humming right along.